Welcome everyone to the Kendall Report. Here we are at Wednesday night after the big Fed day. Somebody's talking about I have rose-colored glasses on. Not sure what that means. But the interesting thing that came out of today is it appears that people actually really thought they were going to pivot. And I was talking to somebody earlier and they were telling me, well, you were right. I'm not right. I'm listening to what Powell's saying and believing what the Fed's saying. I've been telling you they're not going to pivot. They're not going to lower rates. They're not going to pause right now. I still have a terminal rate target of 550. Powell kept telling everybody today, I couldn't stomach the whole question and answer part of the session, but because most of the questions aren't very good. But the reality is they're not going to change anything. They kept the inflation story. They said they're data dependent yet, even though they took out this a couple lines and everybody tries to make something out of it. Basically, what's going on here, folks, is the Fed is going to crush inflation at any cost. And I'm still under the opinion, it's interesting because we traded down to that 40.80 level. I would tell you, I took advantage of that earlier. We're now 41.03 again. And when they went below 84, coming down into that 84 to 60 handle that I talked about last night, that is one of the areas where support is on the weekly. I think that intervenes the possibilities of a 39.50. I'll go through all this stuff here in a minute. But some of the things that I thought were, and I don't know if there was anything even interesting in today's conference. As always, the markets rallied. We were up almost 0.75%, then finished down 0.75%. Got some follow through, and the patterns are kind of ugly. And I'll show you. And it turns out that the algos were right in that we're going back underneath the 10 period moving average. I'll tell you what I'll show you here in just a minute what's going on. But the patterns are very revealing, and it looks like there's still some potential downside. Maybe we just got a little flash in this market to going down under that 40.80 number. So unfortunately, you have to watch these numbers all the time. I'm just going to propose something here right now. For the summer, it is really difficult for me. I have to get over here at 6 o'clock, and that's just probably the worst time of the day there could be. So I'm considering, give me a vote here on the timeline if I went to 10 o'clock Eastern during the week, because it'd just be a lot easier. It's really difficult. I'm late again tonight. Last night, I just got a lot of things going on that are keeping me from being available at 6 p.m. And I've been working from remote location. I have to come over to the studio. So give me some thoughts on that. Okay, so a couple things that I want to bring up is I think there's still a better than even chance that we're going to see another 25 bips in the June 13th, 14th meeting from the Fed. I don't think they're done. We'll see what kind of metrics we got with the collapse in crude oil. Maybe if it can stay down, maybe that will help out some of the inflation and maybe take out some of the expectations. But I think they're serious about trying to get this thing to 2%. I don't think they'll get it there, but I think they're serious about trying to get it there. And they're just going, it's not just longer, higher for longer. And it's really more about the new strategy I've been talking to you about. And I'll go into this just a little bit, and then we'll get into the normal show. It just starts off this way tonight. I talked to you, if you recall, if you've been watching the channel for a while, these sea changes, which are these big, you can almost go decade by decade by decade, and there's these big shifts in how the economy gets structured, interest rates, all of that. I'm convinced, as much as I've ever been, the Fed wants out of this whole QE, QT. They just want to manage their balance sheet at a reasonable level. I don't believe that you need a $900 billion balance sheet like in 2008. Just like somebody was talking last night about all the banks that failed so far were bigger than all the banks that failed in 2008. Well, we're in a different world now. It's not 2008, it's 2023. And the world is growing. There's still growth. When you start putting in even moderate growth at 2%, and you start to extrapolate that out over the world, the banks are just going to get bigger and bigger and bigger. And I know the whole scenario of, man, there's so much I could go into tonight, but I just want you to know that it's not just right now that they're talking about. was talking to a friend today, and I said, you know, I caught this one little, it was probably 2 or 3 meetings ago, I think I mentioned it last night, is that Powell said that we are working on a strategy that we believe that's going to help the economy move forward for decades, was what he said. And it was just a one sentence line answering a question to somebody. And I picked that up and said, that's what they're doing here. They want to change the structure. I grew up with the Fed starting back in the 1979, and even before that, the Fed always adjusts rates to the markets. The markets kind of told the Fed where to go, and then their job was to take out any excesses and all that. Their job wasn't to move the meter up and down like they've been doing, and you know, starting with helicopter Ben and going into GFC, all that stuff. That is, those of you that have been around the markets for 20 years and you think you actually understand what's going on, you probably don't, because you think that's how it works. And it's not going to work like that anymore. Things are going to shift substantially. And the way deals were going on, I was talking to somebody in commercial real estate, and they were talking about how they were able to just pyramid, like one particular individual went from had $50 million, which was a lot of money, but rolled it up over the last almost 20 years to $500 million, to $500 million in multifamily loans, not loans, but properties. And that was a great game at zero rates. That game is over. And I was saying, it's not the fourth quarter, it's not any of that. The game's over. And not only that, they closed the league down. So now you have to rebuild the game from the ground up. And that's what I think is going to happen with the economy as we go forward. There's going to be a lot of restructuring. And we're just going to have to watch it. We are in the transitional phase right now of changing how the economy is going to be operating based on the metrics, what type of deals you're going to be able to do, whether it's real estate, it doesn't matter. And we're looking at a higher level of interest rates. So even if they get them, let's say they get the rates or the inflation to 2%. Well, they have positive yields, you're still going to have 4 or 5% yields there, even if they achieve their goals. Chances are they don't achieve that. It's probably a 3 handle on where we're trading right now, like on a 10-year. We're probably looking at the best it's going to be. And as things get restructured, the economy gets more activity, we're going to see rates move up a bit. And I'm still stuck in this range where we're going to see mortgage rates at 6 and 7, and maybe spiking to 9, and maybe coming down to 4. But that's how the world's going to work. So eventually, the residential real estate market will start to move again. People start to realize if I'm going to change my life and I'm going to upgrade my lifestyle or whatever they're doing, or they have to move to another town, they're going to have to do that. The refi market's gone, all that's gone. So I'm going to try. I've dropped down a rabbit hole. I'm going to try to crawl out of here. But the point is, these sea changes are significant, and they're you can go back every decade. I won't do it tonight because it would take me a long time to get through it. But there is a shift coming, and so if you think the Fed somehow is going to come and helicopter Ben's going to show up, and he's going to save the economy. And I would argue right now, save the economy for what? I talked about, I think Sunday night, I was in Phoenix and every parking lot's full, everything's full, economy looks fine. We're looking at these metrics. I mean, look at these ADP numbers, 266,000. Everybody's expecting 149 on ADP. You know, no one was paying attention to that today, but we're coming into employment numbers on Friday, and all of these metrics still are not a recession, still are very positive. And even Paul mentioned the participation rates up. We saw the JOLTS numbers come down a little bit. So you could argue that the JOLTS numbers coming down is still a positive, is that the job openings, that these jobs are being fulfilled. And maybe that's why we're seeing the 255 on ADP. We'll see what we get on Friday. But I just want to point out that this is a real thing. And as far as I can see out, which I told you I like to trade as far as I can see, like headlights on a car at night. I want to see the next corner so I can at least know how to navigate going forward. If you go too far out in your assumptions, you end up, the more likely you're going to be wrong. So if you can do a 3-day, a 10-day, 3-week, 3-month, you've got a pretty good chance of being close to the target. The further out you get, the more likely you'll be wrong. Just ask Harry Dent, ask Peter Schiff, ask those guys, and you'll know exactly. They'll tell you, yeah, I tried to predict out 5 years and was wrong every time. So I'll get out of this little scenario, this rant that I got into tonight. But this is going to be a thing going forward. And hopefully one day somebody will watch this thing and go, he was right. I believe this is going to change how everything is operated as we go into 2025. I heard something that was interesting, though. I'm going to bring in 2025. I'm quite on a big rant here at the moment. 2025, all the Trump tax cuts go away. So there's an automatic tax increase coming if nobody does anything in 25. There'll be hopefully a new administration. Brandon won't be around anymore. But my point is that there are things that are going to happen. Notice how the current administration never says anything about taxes. They jawbone about taxes, but they love the structure of the tax system right now, and they're not going to mess with it, because if they did, they really would roll the economy. So just one last thing, and I think a lot of you, I talked to Dr. Jim Baker today, and I kind of shouted him out pretty good last night on his new article on Seeking Alpha. So go look at that. I think you'll find it really interesting. So the last thing that I can talk about is the debt ceiling, and I believe it'll be fixed. I think it's going to be, they're going to do the usual noise back and forth, and we'll see what happens here in the next 2 weeks. I think the deadline is June 1st, where the Treasury, the bank account is completely tapped out. So we'll see if they come up with any unique things. But, in the end, the standoff is between government spending and all the free money, right? So they've got to stop the spending, and then they've got to get this thing all. That's the whole argument that the GOP is making right now. We've got to make concessions on both sides. So it's going to be a typical show that we've seen in the past. So I think I got through that. So let's get into talking a little bit about the activity that we saw from an economic viewpoint. Like I said, we got ADP to come in at 266. ISM non-manufacturing came in at 51.9. That was as expected. And then, of course, I'll talk about this when we get to crude oil. Crude oil, it got crushed today, even though stocks drew down a little bit. It's interesting. This is all about the coming recession that isn't here. And then some of the, as we look forward then we've got some, not a lot coming out. Tomorrow we have productivity coming out, and it's one of my big reports that I watch. Productivity is expected to be down -0.1. The labor cost is to come in expected 3.9%. So that's got to come down as well. That's keeping inflation up. And then we have claims expected 240 and continuing claims at 1.85 million and change. So I don't see anything coming out of that. All eyes will start to be focused in on the employment numbers as we come into tomorrow's session. Also, just the final thing is we have Apple earnings coming out after the close. And I mentioned this the other night. As we come into Friday morning, we'll be dealing with whatever the impact of those Apple earnings are, along with the employment numbers and all that stuff. So it'll be an interesting Friday morning opening for sure. So we'll we'll cover that. I'll talk more about that tomorrow night. And it was one last mention before I move on. S&P was down 0.7, NASDAQ down 0.46, Russell up 0.41. The Russell finally showed a little maybe possible rotation. I think it's wishful thinking at the moment. But the all 11 sectors were down yesterday. So it was basically a general selling that came in late in the session, even though there was that little intraday rally. And so let's go ahead and get into the database because there's plenty there to look at and get through tonight's video. We won't be doing the long-term view. We covered that. If you didn't see the long-term view, watch last night's video, and you can go to, we've marked the timeline on the video and go right to where the S&P is, and you'll get up to date. All right, so not a lot of damage, but the markets, as I just mentioned, were not down a lot either. It was pretty moderate decline, actually. And so we're looking at 35.33. Last night we were 36.41, so we had 964 sells, 514 buys. So we've already stabilized a little bit here. A couple numbers to watch on the database. Around 32, 33% to 28% is the next level to watch. If we break through 28, and I'll cover 22% is important. And then if we do take that out, then we get into what I call full liquidation mode on the short-term basis. And I'll cover the intermediate database in more detail tomorrow night. But basically, we already saw some stabilization after the big dump yesterday. And there's really nothing more on the database to talk about other than the short term has become very defensive on the short term, and based on price action, it looks like that's been the proper thing to go. Yeah, so I'll cover the Russell here in a minute, and we'll talk about maybe why it was up. All right, we start with the S&P hourly as always. We're trading at the upper end of the market grid right now on the hourly basis. The algos are suggesting maybe flattening out for a couple hours, then once again kind of rallying into the London Open. That's been the typical case. Can't give you much beyond that. That's why you have the indicator so you can see what's being forecast. But you can see the moving average kind of starts to make a turn and go up here. Starting, this is at 2200. This is my local time, so that's Pacific time. So that's coming right into right about London Open. Usually the hour before and hour after are where a lot of this action happens. We still have some downward pressure coming in on the S&P around 41.14, 41.16. So that'll be the level to watch there. The first resistance here, at least for the next, they'll say the next 2 hours, is going to be along this SMA 10, which is 41.17. So that puts us around into that range, but I think it's going to be closer to pretty much where we are at the moment. We're sitting here and we're printed 04. We could print up to 08, 09. And we'll see how everything plays out from here. But this looks like a pretty good setup again. Nice little down. We got a reversal on the first hour of the reopen, and we traded down to 75. And I'll just flash over to this screen. I'll show you a position that I have on as I put it on right here. It's amazing how fast at 77.50. So in the green, always a good thing to be. And we printed up to 05.25 here on the futures. So we'll just continue to watch that out. But I couldn't resist that opportunity as it came down to there. But this pattern is set up pretty good. I usually will respond to numbers. Yeah, there's just going to be a ton of resistance around here, and I think it's funny what Paul's saying, that I don't understand how useless the indicators are. Well, you saw that green; they don't look very useless to me. It's how you use them. We don't have any long positions on our models or anything on the S&P or any of those indexes right now, so they're all based on indicators. These indicators are a part of our modeling process. So you should know that if you think you're going to look at these indicators, they're in our models. There are over 600 variables. We just finished running over 10 million calculations on 16,000 stocks. So there's a lot more to a couple indicators and understanding probabilities in that. But one of the things that, so you should know that the indicators are very helpful, and they were even helpful today, as originally I put out a tweet that it looked like we had a positive slope. As soon as the news came out, if you had the indicators, they completely rolled and were telling you that we had downside action here. There is something here I do want to point out. I don't think it's very valid, but every time I see these, I have to do it. There's 3 green dots over here. There's fib projections, fib 1, 4137, 4160, 4175. So what Paul doesn't know is these indicators have guided a 40-year career. I'm sitting here talking to you right now. And why am I talking to you? Because maybe they might give you some insight. But the point is that there is some big projections coming back in. I don't think these get hit, but I do think we come into these moving averages overnight, and we'll go from there. So the point is, yeah, I always love, actually, folks, and I appreciate the comments. Everybody showing up here. As a guy that's been around the markets for 43 years, doesn't understand technicals and fundamentals. It's pretty funny, actually. It's really funny. Okay, so anyway, so let's go ahead and go to the daily and take a look there. Daily, we've been watching this 10-period moving average line going down for, it's been projected down. Every day we've been looking at this thing. It's been rolling over. Well, all of a sudden, PPMs are negative, but not in trend mode yet, minus 1.11 on PPM1. PPM2 is basically flat at 0.01. That's as close to flat as you're going to get. They're negative under their first and second derivative. And what I talked about last night, I'll blow this chart up a little bit so you can see this. We have a rising 40, we have a declining 21 and declining 10. And what's likely to happen is we get sandwiched between the 40, the rising 40, and the even the 10 or the 21. This is going to be your resistance range. So you're looking at, it's interesting, those Fibonacci projections on the hourly put us right into that 21 period moving average. And, yesterday we had the 4205, 4206.25 that I called the top exactly that day. And I'm not just, that was just I believe it was R2. So that was resistance 2. Yesterday, we traded up here, and we saw the high was 4191, and this was 2 days ago. Yesterday's high was 4167, and we had R2 4166.08. So when we were rallying, we went right to the R2 number yesterday, and then we're down, as we look at the entire range for yesterday, 4078, 4091, 4107. We actually bounced off 07 for a little bit, and it wasn't until the aftermarket we printed down to 95, so it didn't quite make an S3. So we look at today, as we come into today, and we're looking at S2. This is what triggered me to, and and I will argue that this is why you want the indicators, is that if you knew this already, 4076 was S2. We printed that. We're already back over 4100. There's a 25 handle run in the overnight session. So we look up at the upside here. Now, R1, 4122, 4138, and that puts us into that hourly Fibonacci target. So those targets may stay live, and maybe we end up printing back up into that around 4140 level. And I meant to do this. I won't. I'll try to make a note to myself to do this tomorrow night. But what I wanted to do is get the midpoint. I think the midpoint's like 4115. We go a little bit below it, a little bit above it. We went to 4206. We go down to maybe 4050. I've talked about 4050, 4150. These things just keep happening, and the numbers are a little dynamic and change, but almost had perfect hit on S2 overnight tonight. So continue to watch those numbers. All right, to the NASDAQ daily. We got a little below these numbers here. It's interesting. PPM1 is 0.04, so it's basically flat. PPM2 is 0.23, which is going to be your major support line. You're going to want to watch 12,955. I talked about that number last night. But you can see here, this is the daily. We still have that upslope, and we closed yesterday. 13,106 was that 10 period moving average. Look at where we closed, 13,100. So basically on it. So far right now, last trade 13,136, 13,112 is that 10 period moving average, and I mentioned this, we still have this upward slope on the NASDAQ. So NASDAQ still has at least a bias to be a slight overperformer. The Russell is not even in the same sequence, but when you look at S&P versus the NASDAQ, you see S&P was down 0.7 yesterday, and we're down 0.46, so a little bit on a relative strength basis, but we're likely to see it continue to climb along these lines. All three of the lines, the 21, the 10, 21, and 40 periods are all stacked together here, and the extreme downside is 19,955, and like I said, that's your critical level. The 21 is at 13,127, so we're right back above that level as we speak right now. But this pattern should continue on a slight upward rise. Doesn't look like we're going to get a big collapse tomorrow based on this. The key level will be that 21. So if we take out 12,955, then anything can happen from there. Yeah, I just see William Freeman. I see your question here. I'll tell you what I will make a commitment to do, and it might be even a Saturday where we'll have like a live stream. I'll cover some stuff, and I'll just do a total Q&A on the indicators. That might be really good to do. So we'll do something like that. That way you can get those type of questions answered. But I just want to keep the flow of what's going on here right now. So let's go ahead and go to the Russell. So Russell continues to kind of waffle around. This is interesting. Let's see if I can blow it up so we can. There is a pivot number that's coming in here right now. Let me get this number at 1750. if we were to get above 1750, then we'll probably challenge the 10-period moving average. I've been talking about this a few days. It looks like probably coming into Friday is where we should start to bottom here on this pattern. But looking at this, we're basically, I'm just going to take a minute and get my drawing pin out here and just draw in this box pattern. So this is where we've been locked in basically in this pattern. And like I said, we're just working this box here kind of up at this range. And what we're trying to find out is which way we break out of this box. Right now, the downside, even though we're trading there, the algos, if you look down here at the 40, it's trying to turn up. So that suggests that at least, I'm going to clear out all this junk here. That suggests that the market wants to come on and at least test this area. It doesn't mean it's going to go up. It just means that that test is likely in this pattern. Maybe it gets more of this. We don't know, but it does. It is starting to lean toward in the next day or so that there's a possibility there. And someone said, how was the Russell up yesterday? There were some of these banks that got a little bit of a bid, but I think in general, on days like when you have the Fed moving things around, people start looking for bargains. And it was probably just, it's kind of a lame thing to say, but looking at kind of bargain hunting, because this is what I think this is like going to the bargain basement. This is where you're going to find the cheap stuff. Is it good? I don't know. You have to do some good fundamental analysis to understand that. But it's definitely in this where it's relatively cheap and looks like it's relatively has some merit there from that standpoint. All right, we'll take a look at the 10-year. Another big reversal yesterday. It's interesting. I don't know if I even caught it yesterday, but I'll bring this up here real quick. As we got an RTX sell signal yesterday on the 10-year, we came down. We got that reversal on Tuesday, and then today we continued to follow through. Got close to at least the market grid numbers. 387, the low was 336. So just looking here, yeah, S3 336, 3.36, and let me just look here on the high was 47, and market grid was R2 was 48.90. So just short of an R2 and almost a perfect S3 for yesterday. You can see, and I talked about this last night, is that the downward slope of these moving averages, this is your angle, this is your trend here that we're looking at from this standpoint. So these are likely to be trend lines where we're going to continue to press down. If this is the case, it's possible that we get a retest of some of these lower prices. Now, the fib targets on the downside are 28, 3.14, and 3.06. So those would be extreme numbers. That's these dots down here, the fibs. I think this was probably the worst we get is 328, which is basically a retest of the lows that we had over here during the whole banking. The worst it got to was 329. So we're going to maybe retest that low. I was talking about it coming back in, but we're starting to get some, it looks like we can get some acceleration on the downside. So there's a lot of overhead resistance, and these long end of the yields aren't going to be really relative. I think I mentioned that I'll try to do a yield curve. I will still try to do that. It won't happen tonight, but maybe tomorrow night to close out the week, we can do some yield curve stuff. Let's take a look at the 2-year. Two years coming right down to the fib target, 3.76. We're looking at right now 3.80. So we're right on that. The next, if we just look, this is daily. We look at the market grid, it's suggesting down to 371, 366 level is possible in this pattern. And that would mean that we exceed the 370, 355 is this second fib number, which is just below the STX. But these downward trends are still telling us that the 2 years got some downward pressure here yet on the front end. And so that looks like that will continue. And the upward bounds here should be around 395 on the upside. So we're getting plenty of volatility, not like the volatility that we ended up getting if we come back over here and just, this was at the banking crisis, this little range here. These are numbers you can look at all these windows of the past, and you'll see that we never saw this kind of crazy volatility here. And it, like I talked about this, I think last week or so, the ranges, all of the market grid numbers, everything is kind of normalized again. It looks just like, these trends over here. We just get these normal kind of ranges. So we're back in the range, but we definitely have a downward channel right now. So I would look for, let me clean this out. I would look for a potential for the market grid to maybe turn up at some stage. And all that's going to do is suggest that we come back into those moving averages. Yeah, I hadn't looked at oil till just now, but look, we've got a big reversal going. They printed all the way down here to 63, 64, which is a retest of these lows back in March, which is, once again, the whole banking crisis concept here. I was looking at my YouTube feed just a little bit ago, and there was some guy on there because of Pacific West Bank was down. This is it. It's going down. It's going to take everybody down. And listen, I just want to, this relates to crude oil from the standpoint that it's the recession, the credit crunch, all of those things are happening. I think there will be a contraction of credit, and maybe there's some slowing in the economy. But, this is a drastic reaction to those concepts, and there's this is a big market. Oil markets is the big leagues, right? So this is not to be looked at lightly by any means. This is a big commodity on the planet, but we're already getting a reversal tonight. So if we can hold this and close higher today, we should see the market grid turn up on after Thursday, tomorrow night when we get together. We should see that turning up if. That's an if. We can close over this range where we were yesterday, over 68.60 should be enough to get that to happen. If we go into the weekly mode, this gets somewhat crazy because now we just traded down below the 200-week moving average. And we did that back in March. And now we've done it again. Can we rebound here? The algos on the weekly suggest that this should be the bottom week, and I was talking about this the other day. we'll see how this all sets up as we come into next week. Sunday night, I'll cover that in detail. Yeah, as I continue to talk about gold here, we actually got all the way up. This is a weekly chart, so we got all the way to RTX weekly. That number is 2100. We're actually printing at 2053. The intraday high 85. So we're pretty close to getting that. Let me get this number again. It doesn't look like 2049 was RXT. So we're trading right at it at 2052. So the 2100 number is the fib target on the upside, I believe. Yeah, 2167 is still valid. I was talking about staying in this range, but also talking about that. Here's a good example of that angle of attack and a 10-week moving average. We got down to, it was 1975. We printed 1985. It was already bouncing off of this yesterday, and we got the follow through today with reaction to the Fed. But there's a but. Okay, let me draw in a couple things here, and this is a interesting scenario that we're seeing here. And if you notice, I'm going to draw in a few things here to pay attention to. I want you to look at these, primarily these two algos, and looking at from the viewpoint here is, you can see we've got, the algos suggest, I'm going to do my best to draw a straight line here, that this bar is going to be the peak momentum. That the fact that it's peaking out doesn't mean that that's going to be the peak of the market, but it does tell us that we're going to start to decline from here, and we should come back and continue to hover along this line. I've been talking about this. Then it flattens out. So possibly what we get, depending on how this market, let me get rid of this junk, depending on how we finish out, we might get the market grid to expand, continue to expand up. Maybe we start getting a little channel here over the next couple of weeks to follow this line, and then maybe we get, the market grid starting another one of these consolidations. And just real quick, I'm going to take all this stuff off here, and I'll show you something. And these Fibonacci targets up here are still valid, and those are 2167, 2304, 2388. These are still valid targets, and I think they have a better and even chance of seeing at least at Fib target 1. The possibility of seeing Fib 2 up at 2300 is likely. So haven't figured out exactly what the circumstances are that will cause that. I talk to you folks about this often, and what I'm talking about here is what I call reverse fundamentals. So if this is going to happen, what type of events are going to happen in the real world that are going to drive this kind of narrative that would get a bid in gold at this level? And right now, all of a sudden, Peter Schiff's looking right again. So it's kind of fun. I always have to get my Peter Schiff jab in there. But the point is that these are still valid numbers, and I would say that there's probably a 60+% probability that we'll see that 2100 number, and there's probably a 40% right now that we'll see the 2300 level. All right, we'll continue to hang out with this. Looking at the Bitcoin still, this is the weekly, has at least one more week maybe 2 to ride that same curve, similar as gold. Let me blow this up so you can see the configuration a little bit better. Now you can see it's making a sharp right-hand turn here on the middle of the month. I talked about this on Sunday night, but we've got another couple of weeks, and then we should see possibly not a serious decline, but a rollover, and I think we'll find support around this 200 period moving average, 26.7. We got down to, this is a weekly chart, we got down to 26,666. I talked about that number last night, and here we are back at 29,077. So there's still an underlying bid, and Bitcoin still looks pretty good here from this standpoint, but we definitely have something in the next couple of weeks. We'll have potentially something to look at as we come into there, because you're also you're seeing that the PPM2 is starting to peak out. PPM3 is kind of floating down below. It's not really in play here, but PPM2 will be your ultimate support in this pattern, which will be down at 23,800. We'll just round it off, 840. But that will be your key support, and there's probably some support around the 200, which is 26,000. So that looks like that should be a pretty good pattern there. We'll take a quick look at the dailies. So dailies got, you can see the upward slope on the projection for the SMAs. They're still looking higher, and we have a fib target above 30,850, but we don't really see any huge upward move. But it does, as I just said, we should be up for at least into around the 15th. We'll have to watch price action really close when we get there. Yeah, real quick, I see Mr. Richard had a question on there. Yeah, when the 10 and 21, let me see if I can just blow this pattern up just a little bit more so we can see this. Yeah, so you've got a downward slope, you've got a crossover here. Typically, the crossover ends up to be a little bit of a top, and where we'll see maybe a move up to this 29, maybe this 30, and then we come back into it. But you can see the daily moving average is being projected higher while the 21 is coming down below. So typically right now we're at a 0.54 on PPM1, which suggests that there's only about a 30% probability to trade below that number and stay below it at this time. So we probably don't close below that number. So it's going, one of the things you can do is just see what the value is changing on a day. So 28,730 to 28,880. So we're looking at $1.50 a day on the rise. So you should be able to stay above that number as we go forward. Okay, folks, that will do it for video tonight. I apologize. Did you guys give me any feedback on the idea of starting at 10 o'clock instead of 9 o'clock? Since I haven't been able to start very well at 9 o'clock. Yeah, anyway, just looking at some comments here. Yeah, I think what we need to have in this community is we need to have I need to commit, like I was saying earlier, to a stream where we just talk TA, talk indicators, all that stuff, and my view on on some of this stuff. That would be fun just to do that, not trying to do predictive type strategies as well. I've done a couple of these in the past. That might be fun to do, especially if we could get some serious participation. So, yeah. So I know there were some folks in the live room that used to hang out. Maybe I'll try to reach out to you folks, and maybe we could do a broadcast, a live Zoom, and take questions from the Zoom, as well as maybe doing something like with YouTube. Yeah, I need to set up a poll. I think what I'll do is I'll do a poll on Twitter. So if you're not following me on Twitter, last time I looked, I'm at 7,999 followers. So if you get me over 8,000, looking for the 10,000 mark on Twitter, and that'll be fun. Yeah, so yeah, like I said, it's getting more difficult. The summer, just life in general, it's 6 o'clock is like the worst time. So you don't get to do dinner and all kinds of other stuff. So, yeah, that's funny. Just looking at some comments coming through. Yeah, so yeah, we should plan this out. I still think, and I'm just going to chat with you folks just for a minute before we close out tonight. I still think it would be fun to do a conference of some sort, maybe get some speakers and do some stuff in a live face to face. I'd love to meet a bunch of you. That would be super fun, and I love doing those things. So maybe we can do something like that at some stage. It's about to get really, really hot here in Arizona. It used to be funny that you could get a conference room really cheap in the summer, but everybody figured it out. So now people are doing lots of conferences in Scottsdale and alike. There's nothing up here, and it takes too much to go from the airport. It's a couple hours to get up into the mountains where I'm at. And there's no real good facilities. There's one potential, but it's too much effort, and there's not a lot of hotel space and all that. So, but anyway, yeah, it would be kind of fun to do that. Maybe even doing something regionally in the U.S. if we can get enough interest. Anyway, but you're right. I'll do a couple of these things. We'll do some polls on that and see what we can come up with. Yeah, Larry, that would be awesome too. Just yeah, I'm just looking here. Anyway, I wish I had the comments. I need to have someone that's live in my ear and can tell me, hey, Bob, here's a comment from somebody, or even live on the channel with me. Yeah, yeah, Old Town Scottsdale for beer, sure, that'll work. Yeah, there's some good spots. And Scottsdale, I used to do all my national conferences there. Yeah, Gil, I did not see that. Why don't you send me an email on that? Info@Kendall Report. Why don't you do that? That would be cool. I'd like to have it. That's funny. Points only. Bob doesn't want car windows getting smashed in SF. That's for sure. I never lived in the city in the Bay Area, but I lived in the Bay Area for a long time, and I worked in the city, Pacific Options Exchange. So I miss the city, and it ain't worth going. They've ruined that place big time. It's terrible. I was in Los Angeles a couple of weeks ago for a couple of days, and it was when I did the Meet Kevin interview, and LA didn't feel as bad as the last time I was there, and it had been I think last August. So yeah. Anyway, I'm just Yeah, FFE4. Yeah, I know. Yeah, they've ruined it. I have friends back in the Bay Area. They've already warned me. Like, there's no reason at all to go to San Francisco. Good news, they haven't ruined Napa. They haven't ruined the wine country yet. And but the city, what a shame. I mean, I love that place. I used to get off the train at 5:20 in the morning and just love the smell of the ocean air and the feel of San Francisco early in the morning going into the exchange. It was pretty cool there, actually. So like I said, most of you know I was in Singapore a couple of weeks ago, and that was an insane experience. And I got off the airplane trying to catch an Uber to get to my hotel on Friday night when I got back. And I'm trying to roll my luggage, right? And there's smashed plastic, glasses and all kinds of stuff, cups, garbage everywhere. My wheels were getting caught on the garbage. And I just left Singapore that was like super spotless. I mean, even the bathrooms at the airport was like going to the Ritz-Carlton. So it was pretty amazing. Anyway, folks, nice chatting with you. I wish we could hear voices and stuff. One of the things I was looking into the other day is actually having one of these call-in numbers that we could actually have people go in. I guess something we could do. There is a way to do that. Is we could just do a Twitter Spaces, and I could broadcast there, simulcast that, and then we could bring in people. And I've got a mic that I could bring that in. That might be fun to do. So anyway, hit the like button, just like somebody said, and subscribe. We're actually over that 32.8. We're kind of stalling at 30, right at 33.8 now, 33.7. So it's kind of funny. It's really funny. So anyway, if you're a new fan from Meet Kevin, I'm actually we're trying to get something else organized here soon. So we've got some ideas. Anyway, thanks a lot. We'll talk to you tomorrow night, same time. Like I said, maybe I'll do a Twitter. I'll do my best to be here on time tomorrow night. It's been very difficult with a lot of other things that are going on around me. So have a great evening, folks. Good day trading tomorrow. Should be interesting. We got Apple and unemployment coming in on Friday. So plenty of action yet this week. So I will talk to you real soon. Take care, everyone. Yeah, FF, I just looked at that article you sent. That's very interesting. It is run by a dictator after all, but it's clean and orderly. It's funny because I said I was looking for the guy with the little broom to scoop up all the pieces of paper around when I was in Singapore. Anyway, have a great evening, everybody. See you. Yeah, thank you, mods, Smurfs. Thank you. See ya. Holy cow, everyone. 4108.75. E-minis.